the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. Well, Singapore shares were up today, tracking gains seen in Asia. So if you look at the Straits Times Index, it was up 0.94% at 4,260 points at about 3:08 p.m. Singapore time. And that is with a value turnover of 1.29 billion Sing dollars seen in the broader market. We do see the STI closing in the green as well, so let's take you through the numbers. So the STI ended the trading day up 1.23%. at 4,272 points. Now, in terms of value turnover, that's 1.95 billion Sing dollars, and gainers outnumbered losers 391 versus 185. Now, top advances for today, we've got for you GMH USD, DBS and Jardine Cycle and Carriage, and top decliners we have here Hong Leong Asia, New Incorporation USD and Delphi. So now, in terms of counters to watch, all eyes are on Singtel. Why so? The telco giant said in its business update today that its Q1 net profit soared 317.4% to 2.9 billion Sing dollars, and that is from 690 million Sing dollars seen in the year-ago period. Now, elsewhere, from how investors are reacting to an in-line U.S. inflation reading to how Indian Prime Minister Narendra Modi is likely to meet with U.S. President Donald Trump during a visit to the U.S. next month, more international headlines remained in focus. Now, also on deck, earnings out of City Developments Limited and Yangzijiang Financial. A lots to watch, and joining me right here in the studio is Kenneth Goh, Director, Private Wealth Management at UOB Kay Hian. Kenneth, welcome back to the show.
Thank you for having me here today.
Well, let's start with global markets this time around. I mean, U.S. consumer prices increased moderately in July, but rising costs for goods because of import tariffs that led to a measure of underlying inflation, posting its largest gain in 6 months. Now, just to look at the headline CPI numbers, it was up 0.2% last month, and on a yearly basis, it was up 2.7%. How have investors in both the US and Asia reacted to the news thus far?
I think generally markets have saw this as under control inflation numbers. However, because there's underlying price pressures that are still intact, so these are boosting bets for September federal rate cut. So what happens, right, is that you can see that in Asian markets, as January has closed off positive, European markets have opened positive as well. US futures are also broadly positive as well. So this is something you can see that there's a lot of positive feel on this particular aspect. Yeah.
And if we go back to the Singapore stock market as usual, Kenneth, today we saw the STI closing up over 1%, 1.23%. How did the STI fare in your opinion? And any surprises if we look at the biggest movers?
The big movement has been from Singapore Telecoms,
Yeah.
ST. I think generally speaking, they have a huge 317% surge in profit of 2.88 billion. This is largely a one-off gain. This is not going to be a perpetual thing. This is because due to its partial sale of its Airtel, which is in the Indian subsidiary, and the InTouch Gulf Energy merger. And this is not due to core operations. However, underlying net profit still rose about 14% to 686 million, in line with forecasts. Markets are generally quite positive. Most analysts have buy calls on Singtel, but there is also some caution because obviously they will weigh sustainability versus headline surprise as well.
And if we look at shares of Singtel, I know you generally don't comment on individual stocks, but shares of Singtel up 3.571%. Do you think investors may have gone ahead of themselves if we look at the telco industry and what's going on with, Keppel's divestment of M1 and also what went on with StarHub?
Well, generally, analyst 12-month price targets are ranging at about the average target between 4.41 to 4.45. And obviously, the big news was M1's telco business being purchased by Simba. And obviously, the latest news was My Republic's broadband business is now being owned by StarHub as well. So this, in a way, proves the point that I think Singtel's operations have been able to fend off quite a fair bit of the competition. Obviously, M1 was the original first competitor, and now they are no longer in the scene. And obviously they're under new management from there. So you can see that Singtel has grown very strong and very resilient in its home market as well.
Okay. Now, another counter that we want to keep our eyes on is City Developments Limited, CDL. Now, CDL posted a 3.9% year-on-year gain in its first half net profit to 91.2 million Sing dollars, up from 87.8 million Sing dollars in the previous corresponding period. The board also declared a special interim dividend of 3 Singapore cents per share, slightly higher from the 2 Singapore cents per share we saw 1 year ago. Generally speaking, how would you assess the outlook of property developers right here in Singapore?
I think it starts off with the private home sales, right?
Yeah.
I think currently private residential prices rose about 1% Q-on-Q in quarter 2 this year. So it slowed for about 0.8 as compared to quarter 1. So landed properties led with about 2.2% growth, non-landed led about 0.7%, and core CCR, which is core central region, outperform at 3.0%. These stats are from URA, and obviously you can have at the same time a lot of upgraders coming from the record $1 million HDB resales. So a record 415 public units resold above 1 million in quarter 2, which is an incredible number, up 76% year on year and nearing 75% of 2024's total. So resale prices rose a modest 0.9 quarter on quarter. So, but it's a 21st straight quarter of gains, which is really significant from there. So as the HDB market increases, it also pushes up the private market as well. Then obviously we talk about a little bit about supply. The rental market for private residential properties increased 0.8 quarter on quarter, up from 0.4%. So developers sold 1,012 units in quarter 2, down 64%. But I think supply remains robust with about 10,000 units scheduled for 2025 through the GLS program itself. However, it looks to be overall a very steady. But I think obviously the regulators will be closely monitoring that as well. On a bit about CDL, even though I don't comment on the shares itself, but this is on the public domain. They also recently secured 2 EC sites at Woodleigh Drive 17 and Senga Close. They outbid other developers. So the Woodleigh site was intended for 420 units, was acquired for 360.9 million Sing. So it's about 782 square feet, surpassing previous high bids. And the Senja Close about 252.9, which is comes out to about 771 PSF. Aims to yield about 295 units with a mandatory early childhood center. But obviously, it also means that the state of the market is steady. But obviously, generally, if you're going to see too much froth in the market, regulators have to come in with new measures already from there.
Now, if you're just tuning in, we are now in conversation with Kenneth Goh, Director of Private Wealth Management at UOB Kay Hian. And Kenneth, now we want to set our sights on Yangzijiang Financial. The investment management firm yesterday posted a 28% rise in net profit to 137.7 million Sing dollars for its H1. This is from 107.4 million Sing dollars seen in the year-ago period. Now, largely driven by the reversal of credit loss allowances, higher contributions from maritime joint ventures and net foreign exchange gains. Broadly speaking, if we look at investment firms like Yangzijiang Financial, given the current currency movements, rate movements, the outlook of the O&M industry, what would you say is the outlook of firms like Yangzijiang?
As long as interest rates are relatively stable, currency is not so volatile. So that's why they were able to actually get a little bit of net forex gains, as well as reversal of credit loss allowances as well. This is likely to be positive for the company in view of this kind of stable environment from there. So as long as the US rates they remain steady, and the Singapore dollar also remains steady as well, as long as because they are anchored in different currencies as well and asset classes, so they tend to do quite well on these things. Obviously, volatility of market doesn't help them as well. So the offshore O&M, offshore and marine market is closely tied to maritime investments. So it's going to benefit them because of improving demand in shipping and vessel financing. So its sister shipbuilding arm is actually posted higher earnings. And you're going to see better global trade buoyancy. But obviously, global trade buoyancy is also dependent on tariffs. Yes, clearly. And when tariffs are too high, then it won't be very buoyant, right? For various reasons. And so these are the things that something to look out for as well. Yeah.
Now, across the region, Kenneth, I know your expertise is mostly in Greater China and Chinese markets. China's Vice Finance Minister Liao Min said the country's plan to subsidize some interest on loans aims to ensure that households and businesses have more financial resources to reduce credit costs. And this as Beijing looks to boost consumption. What do you make of the move? How effective will this be? How have investors reacted to the news thus far?
Generally, many economies have urged Beijing to actually switch towards a consumption-led economic model. Obviously, purely focus on investment is not ideal for the country because it leads to empty buildings, empty factories, so on and so forth from there. So it really has, and obviously the tariffs has actually heightened costs for a shift for this particular long-term strategy from there. So it helps them to actually focus, to actually do better from there. You're going to see there's a lot of state support as well because the news outlets have also highlighted that ICBC, which is Industrial and Commercial Bank of China, CCB, China Construction Bank, and Bank of China, said on Wednesday that they will actively implement the new subsidy policy. This will happen. And obviously, what it means that they're going to cut credit costs for household and businesses by subsidizing the loan interest from there. So it's meant to boost consumption and free up resources for investments from there. The likely impact is that the theory is that as people consume more, it will allow companies to expand from there. However, there are also other issues to be concerned about. The structural headwinds, for example, back to tariffs and weaker consumer confidence and property downturn, which is a big problem. It's not really going to be the silver bullet unless it is backed with other reforms as well. It needs to be backed with other things as well.
Do you think investors have moved on from what went on with the property market given recent news surrounding, I believe was China Evergrande just today?
Yes. Generally, they have already priced in the dismal news of the property counters from there. However, it's a huge impact on confidence because the asset supply is not being taken up right now. So there's still quite a lot of unsold units still pending out there in the market as well. So I use the term is generally cautiously optimistic. So it's not it's just more of a wait and see kind of thing as well. It's one piece of many reforms that need to happen.
Okay. And further away, Kenneth, a piece of news out as well. Indian Prime Minister Narendra Modi is reportedly likely to meet President Donald Trump during a visit to the U.S. next month to attend the UN General Assembly meeting. Now, this is according to a report by the Indian Express newspaper out today, citing sources. We know for now Reuters could not immediately verify the information, but how far is this a reason for investors to be optimistic about Indian equities?
Well, the market isn't responding significantly either way to this. Obviously, 50% tariff is as good as 100% or 200% because India normally does lower value exports, like, for example, textiles. Obviously, we can exclude the current trend of iPhones for now because it's not a lot of volume. So that 50% tariff will just take out any margin from there. They just simply, there is no way they can make money out of it from there. The correct term would be across the board, the internet, it would be muted optimism. But but you can see that the Nifty 50 and the Indian Stock Exchange, the Sensex has been holding steady from there. It's just at least they're talking to each other, and it's something that the market has not responded one way or the other for now. But at least it's something a bit more positive than negative, at least for now.
I see. We do have about 1 minute to go, and I do want to get your take on the release of the PPI numbers due tomorrow night. What are you expecting when it comes down to the US Producer Price Index? How far will it give us a more comprehensive picture on the price movements in the US?
If it's not going higher, I'll be quite surprised.
Because the CPI was largely in line with expectations, wasn't it?
Yes.
Were you expecting something similar?
Not significantly, so it'll take time. Because these numbers take downstream. Because many companies would have already anticipated the tariff movement and already stock out in supply. But all these goods are starting to be cleared out from the warehouses as well. But the PPI is something, in my view, likely to go up. And it's because in the high cost environment across the board right now. And supply chains are under a lot of stress and pressure because the rules keep on changing all the time.
I see.
Yes.
Lots to watch as usual. Thanks so much for the insights today. That was Kenneth Goh, Director, Private Wealth Management at UOB Kay Hian. Thank you so much for joining us on Money FM 89.3.
Thank you very much.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.